that basically run a multiple asset strategy all within an ETF wrapper. So you don't have to take the capital gains and losses that you would take if you were managing on yourself. And all you see is the ETF allocation. And under the hood, you're getting that trend following diversification. So lots of great stuff that's out there. I mean, there's been a proliferation of these products. There's probably a dozen or so that are out there that are all, pretty good in terms of giving you access to this exposure.
Yeah, a couple of things with that. One is that point is really, really important about trend following because it is so much better done within an ETF. If you're sitting there holding individual positions and you're selling them and buying them and selling them, it's horrible from a tax perspective. And it's very hard to generate any kind of return, even if you have some complicated strategy that you think is going to do better, that would do better than just doing it in a simple way in an ETF because of the tax consequences.
Yeah, and particularly those replicators, it's pretty good. If you think about a replication that's maybe 80 or 90% as good as sort of the real thing, if you were to invest in, let's say, a portfolio of managed futures managers directly, 80 or 90% when you're paying much lower taxes and much lower fees, you take that 80 or 90% good all day long. Because what you care about is not, the perfection of the gross of fees, gross of taxes return. What you care about as an individual is the net of fees, net of taxes outcome. That's what you care about. And not having to worry too much about it, right? Like leave the trend following management to the professionals who do this all day long and just hold, one or maybe you could hold a handful of these strategies that are out there to get that exposure and just stop thinking about it. Don't worry too much about it.